All right, ladies and gentlemen. All right, guys, I hope you can hear and see me clearly and also the charts that we're going to analyze. What we're going to do today is we're going to analyze this trade idea that we posted yesterday inside the private community. Okay. So the entry was 4,070, the stop loss was 4,073, and then the full take profit was 4,000, which puts us at a risk to reward of 35-1, guys. Okay. And this is how this trade played out perfectly. And today I'm going to explain to you every single detail that made me take and post and share this trade idea. Okay. This is going to be a bit more extensive. It might be a bit longer, but this is necessary for you guys to actually understand the top-down analysis that you're going to need in your trading journey, in your trading career. Okay. So let's just go back to the charts. So this is the gold chart. This is the weekly gold chart. And if you remember last Sunday during our Sunday call, what I said was I'm anticipating a bearish weekly candle. Okay, that was my expectation. And then this is how the candle actually looks like at this point. Of course, it can take out these lows and expand even further down, or it can flip and then turn bullish. We're going to see what it's going to do, but my expectation is that this candle is going to take out these lows over here, and then actually, close bearish under these wicks. That's my expectation. But if that's going to happen, we'll see today and tomorrow. Okay. So I was anticipating for this weekly candle to be bearish. What's going to happen every single week is every single cycle. This could be the daily chart. This could be a daily candle within a daily candle. This could be within a weekly candle. Every single time period, every single time frame is going to have a whole cycle of the 4 steps. Okay. And those 4 steps are going to be accumulation. The second step is going to be manipulation, right? The third step could be either reversal or it could be an expansion, all right? It could be an expansion, and then it's going to end on accumulation as well. We can also call this consolidation, all right? So this is going to mean that just imagine our weekly candle form, okay? So this is the weekly candle, and then this is going to be the wick of the weekly candle. Then that is going to be the wick to the downside, all right? So if I'm anticipating a bearish weekly candle like this, okay, I would expect for Monday to give me some sort of an accumulation phase. And then on Tuesday, I'm going to see the manipulation to the upside. It's going to grab some liquidity, and then it's going to expand to the intended direction. Okay, this might happen on Wednesday, it might happen on Thursday, or even on Friday, the last day of the week. I'm actually going to record a whole advanced ICT course, and I'm going to start that course with the daily bias. What I'm going to explain to you guys in that module is exactly this same thing, but in the context of the daily candle. Okay, so if a bearish daily candle is going to form, this cycle is going to be on the daily time frame, of course. Okay, so it's going to be probably during Asia session. You're going to see the accumulation phase. All right, so the accumulation is going to be during Asia session, and then maybe during London session you're going to see the manipulation, and then expansion is going to start with New York, and then New York PM session might give us the accumulation, and then this daily candle might actually close here. Okay, this is in the context of the daily candle. Now, in the context of the weekly candle, those phases are going to be based on the weekly time frame, of course. So the accumulation is not going to be Asia session, but it might be Monday. The manipulation phase might not be the London session, but it might be a whole full day, which might be Tuesday. Okay, and this is how this weekly candle is going to form. Let's now jump to the daily time frame in order to actually see what happens since Monday. So this is exactly what happens. We can see that this bullish daily candle last week on Thursday actually swept the high of the previous candle. Okay, it took out the liquidity. It took out the previous daily candle high, the wick, and then closed beneath it. It closed beneath it. So what does that tell me? It tells me, first of all, because my order flow is bearish, okay? My order flow is bearish. So I have lower highs, lower lows. And then here, what I do see is the following. I can see that this daily candle over here last Monday, okay, actually swept these highs over here, but this candle closed below these two candles over here, okay? So what's that telling me? Did we break these lower highs? Did we have a break of structure? No, because we just swept them and then we closed underneath these two candles. So that's going to tell me that from this candle onwards, the next candles are probably going to be bearish. They're probably going to be bearish. And then we did have some bearish price action. The next candle was a bearish candle. This was last Tuesday. We can actually go back to last Tuesday and see whether we actually caught a setup there. Okay. So last Tuesday was this day over here. Okay. This was last Tuesday. So let's just go back to the daily candle because I want to give you guys some context for the target levels that we're going to attack with this candle over here. Okay, so this was the Tuesday candle. My first target is going to be the previous low of the previous daily candle. So this low over here, that is 4,129, that's going to be my first target. And then the second target might even be this low over here, the previous daily candle. Okay, let's just zoom in into Tuesday and see what actually happened during the entire day, session by session. Okay, so this was Tuesday. We can see what happened exactly to the pip, guys. Let's go to the 30-minute time frame. So this is the minute time frame. What we actually see here, so this was zero. So this was the Asia session, the beginning of the Asia session. All right. What happened was we did have this move, and then we had this manipulation during London session. Okay, and we call this manipulation, we call it Judah swing. Okay, and we can actually see exactly which zones and which areas it did respect. Okay, it came into this fair value gap over here, and then it actually swept into the fair value gap here, but it rejected at 2 o'clock, 2 p.m. Berlin CET local time, which is 8 a.m. New York time. As you guys know, we're looking for setups at 10 o'clock, 10 a.m. New York local time, which is going to be 4 p.m. CET Berlin local time. All right, so I'm going to zoom in the 5 minutes time frame to actually show you guys which setup we caught last Tuesday. Okay, so this was the setup during the PM session, and then at 8 p.m. New York PM session. Okay, so New York PM is going to be, it's going to be 4 p.m. No, it's going to be 2 p.m. New York. Okay, which is our silver bullet time period. Okay, we're going to look for a setup at 8 p.m. Berlin CET local time. Okay, so we can see that from the start of the New York session, we can see that clearly price wants to go down. We see lower highs and lower lows. And then what we see here is fair value gaps being created. And then what happened here was in the 5 minutes time frame, I'm actually going to show it to you. We had a beautiful, a wonderful fair value gap. I'm going to show you these 3 candles over here. Okay. These were the 3 candles. So this was my very last order block. And then this was my fair value gap in the 5 minutes time frame. We shared this idea. Our entry was 4,143. At hindsight, we can clearly see that we could have entered this trade with a far better entry. But you know what? I'm okay with a 20 to 1, with a 10 to 1, 15 to 1 risk to rewards. But what we could have done is just taken the 0.5 level, which is the consequent encroachment level of this order block, and then put our stop loss just above this candle over here that created this fair value gap. Okay, so we posted this trade idea, and then our target levels were the next draws on liquidity. Okay, so this was my first draw on liquidity at 4,120. I think this was the first target at 10 to 1, 4,130. The second one was at 4,120. And then the next target level was probably here, 4,100. And I can actually show you guys the trades. Or you know what? You can actually go into the archive and just search for it for yourselves. Okay. So the date is 7th of July, 2026. We shared this trade idea inside our private community. Okay. This was the idea behind the Silver Bullet, ICT Silver Bullet setup. Okay. This was last Tuesday. All right. Coming to today, we actually caught a clean 20-25 to 1 risk to reward yesterday. Yeah. And I'm going to give you the very simple explanation of why we took the trade. So the price opened here on Monday at 4,089. If you pay attention, you can see that it did create something that we call a new week opening gap. Okay, so the price closed here on Sunday and then it opened here on Monday. The gap between these two candle bodies, we call it new week opening gap. This is important. Because why? Because this gap is probably going to function as a draw on liquidity. Price is probably going to go there in terms of efficiency, either close the gap entirely or even better, reject it. It might just close it and then reject it, or even reject it altogether. Okay, which is exactly what happened here. If we just take the 0.5 level, we can see that it didn't even hit the 0.5 level of this new week opening gap, which is the constant encroachment. Okay, good. So this is what happened. This daily candle over here rejected. Let's just go down to the 4-hour time frame in order to see what happens in detail. Okay, so this is the 1-hour time frame. This is our new week opening gap. Then we can see that these 1-hour candles wicked into the NWOG, which is the new week opening gap. And then we had a rejection, and those candles actually closed below this new week opening gap. This new week opening gap basically functions like a fair value gap. Okay, what it did then was, let's go back to the 30 minutes time frame. We can see once rejected within this zone, it actually created another fair value gap. Okay, so what I want to see price get in there and reject from that area. These two candles over here yesterday, you see what they did? They filled this gap, they rejected. Well, this is allowed, this is acceptable. Okay, these candles can wick even beyond the fair value. What I don't want them to do is close above the fair value. I don't want to see that. Okay, so this is permitted, this is allowed. Candles can wick into even beyond the fair value gap. As long as they close within the fair value gap, it's better, it's good. If they close below the 0.5 level of the fair value gap, that's perfect. Okay, so once I had this, let's go down to the 5 minutes. So the idea, first of all, the idea was that this daily candle, I was expecting for this next daily candle to be bearish. Okay, so we were looking for a bearish setup during the silver bullets time window, which is 8 p.m. to 9 p.m. Berlin local time. Okay, so here's what happens. This is the 2-minute time frame. Let's just see. Okay, let's go to the 1-minute time frame, because we posted this trade, guys. Okay, this gave us a 25 to 1 clean setup. So here's what happens. This was our rejection. This was our rejection candle. And then what we did here was we created an order block in the 1-minute time frame. And following that order block, we created a fair value gap. So these 3 candles, okay, these 3 candles over here actually printed a fair value gap. Okay, so my anticipation was I wanted price to come back into this fair value gap, 4,071, and then reject from there. So that was my entry. Okay, this was my entry. But because you guys know that we work with very tight losses, very tight stop losses, you can just, if price doesn't come there on the pip, like price is at 4,070.4 and not 4,071, just like 6 pips, you're allowed to enter the trades. Okay, but it's because it's not going to make such huge difference in terms of profitability and in terms of in terms of risk to rewards. Okay, so we entered there, and then let's just look at the next target levels. So our take profit one was 4,033. This was our take profit one. So the entry was at 4,070. So this was already an 11, 12 to 1 risk to rewards. And then the take profit two was 4,000. Yeah, that was the take profit two because of the relevance. It's a psychologically round psychological level. And then I just assumed that these wicks over here are going to be taken out altogether. Okay, so this trend line liquidity over here is going to get taken out by this very move. Okay, and this gave us, ladies and gentlemen, a very clean 20, 25, 30 to 1 risk to reward. And if you actually pay attention, you can see that even these lows were taken. Even these lows were taken. Okay, because just imagine how many retailers are going to put their losses, their stop losses, their sell stops just underneath these wicks over here. And that's it, guys. This was a wonderful, perfect setup. I hope you guys enjoyed this one. And yeah, if you just look at the trades that we took during the last few weeks, guys, if you know how to read price action, it all makes sense. If you know how to read price action and you know how to identify the highs and lows that are going to be taken most probably, and the overall daily order flow, it all makes perfect sense. Okay, so that's it, guys. My belief is that these lows are going to be taken as well. Some of you might wonder or might ask me, I thought this was the liquidity grab. Yes, price did grab this liquidity over here to make this move possible in the first place. But it doesn't mean that those lows are never going to be attacked anymore. It doesn't mean that. It just means that these lows had to be taken in order to make this price move possible in the first place. Okay, all right, good. I hope this helps, guys. And yeah, we'll see what the next days are gonna bring to us in terms of price action. And then I'm actually anticipating a huge sell-off today at New York PM session. So this could be our next sweep of liquidity. And then what I want to see is I want to see some sort of price action over here that shows me that these lows want to be taken. So what I would want to see is a clean break, a fair value gap being printed, some sort of M5, M1 order block, and then boom. I want to see that. Okay, good. I hope this helps. I hope you enjoyed this one and see you in the next one.